Of all the four principal capital markets, the world of foreign exchange trading is the most complex and most difficult to master, unless, of course, you have the right tools. And the reason for this complexity is not hard to understand. First, currencies are traded in pairs. Each position is a judgment of the forces driving two independent markets. If the pound dollar, for example, is bullish, is this being driven by strength in the pound or weakness in the US dollar? To compound this problem, every currency can be bought or sold against a myriad of other currencies, which raises the next key question. If the pound dollar is bullish, for example, is the British pound strong against all the other major currencies, such as the pound yen, the pound CAD, the euro pound, and others? If it is, then this is clearly a sign that the UK pound is being bought universally in the market. Equally, for the US dollar, if it is sold universally in pairs such as the dollar CAD, the dollar yen, and others, then we can assume that the pound dollar is rising as a result of strong buying of the pound universally and strong selling across the market of the US dollar. And finally, we come to the third problem, which is trying to assess the strength of this buying or selling. After all, a currency may be overbought, strong, or oversold, weak. But how strong is strong and how weak is weak? So consider this for a moment. Assume you have decided to buy the pound dollar and have the following information to help you in your analysis. First, whether the pound is also being bought in all the other cross-currency pairs. Second, whether the US dollar is also being sold in all the other major currency pairs. And third, the relative strength of buying in the pound-dollar pair. Trading success is all about assessing risk and the probability of success on each trade. So the question is whether this information gives you a high risk, medium, or low risk trading position. And the answer is a low risk trading opportunity. After all, you are now taking a position based on a view across the market. First, if you are basing your decision on universal buying or selling of a currency, then you are trading with the entire weight of the market and not just on the analysis of one currency pair. It's low risk. Second, if you know the relative strength of this buying or selling against all the other currency pairs, then this gives you the complete picture. If it's strong, then again, it's low risk. Third and last, if you know what the counter currency is also doing in terms of strong or weak, then once more, if it's strong, it's low risk. And this is where the quantum currency matrix steps in. It provides the solution to all three problems in one elegant indicator and is a complementary indicator to the quantum currency strength indicator. It shows you the complete picture across the market in a simple matrix which works in all time frames from seconds to minutes to months. From the 8 major currencies come the 28 currency pairs, which are then displayed in a table with their relative strength scores updated second by second and minute by minute. And you can think of this as a leaderboard. A score above 0 indicates bullish momentum and is displayed in blue, whilst the score below 0 indicates bearish momentum and is displayed in red. Each currency can then be isolated to show the 7 associated pairs and their relative scores using the toggle feature on the currency icon alongside. If all the associated pairs are showing similar strength, either bullish or bearish, then this is either a good time to join the move, or alternatively, it may be an opportunity to wait for a reversal in trend as the pair becomes overbought or oversold. The quantum currency matrix gives you the tool to see the complexities of the forex market in real time across all the related pairs, along with the strength of the buying and selling. Whilst it's possible to do this manually using multiple charts, what a manual matrix will not provide is any measure of the relative strength. The indicator does this for you automatically by considering the price action across all the related currency pairs and then deriving the relative strength scores accordingly. The quantum currency strength indicator and the quantum currency matrix are the perfect combination. The first gives you the heads up on the individual currencies. The second then completes the picture, giving you a three-dimensional view across the 28 currency pairs themselves. Together, they allow you to assess the probable risk on each and every trade instantly, giving you the tools to trade every pair with complete confidence.